It's been a frenetic week in crypto. We've seen outflows in Bitcoin ETFs of over $3 billion, significant outflows from Ether ETFs, and the SEC with a flurry of decisions. Welcome to Wall Street Blockchain Alliance's Crypto Roundup, where we'll discuss this, the markets, whatever else comes our way in the next 45 minutes. I'm pleased to be with my co-hosts Ron Quaranta and Josh Clayman. Good morning, guys.
Good morning, David. Good morning, Josh. Good to see you.
Great to see you guys too.
Before we get started, I'm going to read our disclaimer. Nothing discussed should be considered any type of advice. Our opinions are our own and not necessarily representing those of our firms, and no endorsements of tokens. Ron, what did you do this morning when you saw the market down a couple more percent?
David, before we start, I do want to ask Josh. Josh, did you get slightly nervous when David said whatever else comes up in the next 45 minutes? I felt a slight chill.
I thought it was a great point, because how often when we've been on these sessions has breaking news literally broken? So, yeah.
I mean, David, to your point, I the past few mornings just waking up, and I make the mistake of putting on the news and looking at the red down arrows, and I think to myself, it can't get worse, right? This has got to be a bottom. And for everyone in the audience, thanks for joining us. I made the mistake of sending Josh and David a text message. David, what was it, Tuesday or Wednesday? And I said, 87.5 for BTC. That's got to be a pretty strong floor for the price. And the market laughed in my face and promptly went right below that. So look, there's a lot of selling pressure. I mean, on the year to date, BTC is down almost 18%, David. And I think the thesis still holds. And you and I and Josh talk about this a lot, which is the good use cases and the long-term strategy work. Again, it's not investment advice. Dollar cost averaging makes sense in markets, in my mind, like this. But people are still getting hurt. And I say this to you often, David. We saw this, you and I got together Wednesday evening for the happy hour. Who's doing the selling is always the question in my mind. And there's a lot of caffeine in my life now, David. So,
What about you, Josh? I know you've been jet setting around the world. Are you back on New York time? Are you still on Hong Kong time, or what? Or somewhere in between?
So I'm on New York time, but whether my body is back on that, I'm not quite sure. But yeah, it's been a whirlwind few weeks. For those who don't know, I was in Singapore very, very briefly, which was the first time I'd been there since pre-pandemic. So it was great. I wish I had been able to stay out in Southeast Asia longer, because we have Japan FinTech Week coming up and lots of other exciting things out there.
Josh, I'm curious about the tone of conversations in Asia on crypto. I mean, David and I, the past week kind of been glum, David, in some of the conversations, relatively speaking, but I'm curious about what the dialogue, to the extent you can talk about it, what the dialogue was in Singapore.
So I think it seems it's positive. I would say that there's a lot of curiosity about what's happening in the U.S., right? And what can be done in the U.S. And it seems like as we go by day, potentially more and more can be done in the U.S. But yeah, I mean, I was there for Wharton RegTech in Asia, so I can't share exactly what was discussed, but I can say, because there were regulators as well as people from industry there, but I would say that the topics that come up in the West about, things like stablecoins, things like AML, financial crimes, all sorts of things, and great possibilities, they all come up. Of course, while if we look back a week to that Libra situation, I think that obviously has an effect on people's minds, but I don't think that's limited to one geography.
Yep.
What about you, Ron?
Yeah, Ron. I was ready for you to jump in there, Ron.
Well, it caught me off guard. I expected one of you to talk. Look, I mean, aside from the price action, again, a lot of the work we've been doing, David, Josh, has really been focused on a couple of the initiatives we've got at WSBA, David, Josh, you and so many members are participating in the drafting of the kind of path forward document. We'll be visiting Washington later in March as well. The other thing that's really caught my eye, David and Josh, is there's two things I wanted to raise. And David, you made a really interesting point. You and I were having long conversations about market dynamics and crypto prices. And we could talk about the macro picture in a second, but I never thought about something that you wisely pointed out, David, which was it looks like TradFi has a lag in responding to crypto market moves compared to call them crypto natives or crypto familiars. And I think that's a really good point. David, what brought that to the fore for you? And I think you and I could talk about how we're seeing that represented in the marketplace.
I was looking at a couple of things. So we had the Bybit hack. And once we really figured out that it was a hack, it wasn't an inside situation, and it was a North Korean actor. There was a movement, but it wasn't like an immediate sell-off, or there was a little bit of a sell-off, and then it kind of retraced a little bit. But once the markets opened on Monday, and I think people in the TradFi world had time to digest what happened, and the size of it, $1.5 billion worth of ETH is not insignificant. I think that made the North Koreans one of the top 10 holders in Ethereum after this. So it's not insignificant. So I think that's when TradFi kind of came in, and you saw a lot of selling in the Bitcoin ETFs, and that's continued on this week. So it really was a lag. Like the crypto folks who were reading it in real time were seeing what was going on. The price didn't move as much as I thought, but then when the TradFi folks came in, they really dragged the price down.
Yeah. Josh, go ahead.
I will say that was a topic of conversation as well, obviously. And I think, it's interesting. People took different types of positions. Some people said, well, look, it turned out to be user error, right? Human error. Although certainly a lot of effort went into making that human error possible, right? In terms of the kind of interference that was done. But some people were saying, well, this happens. It's really a cyber issue, things like that. At the same time, I mean, to me, it's a big challenge, right? Because we've seen this Lazarus group again and again pop up, whether in this instance, in other notable hacks, including, the name is escaping me, but I think it's Axie Infinity. Is that the hack as well that they were involved in? And
I believe it.
yeah, and that also, if we think about the Tornado Cash case, right, that was focused on the Lazarus Group's activities as well. So I think, to me, one of the challenges here is that, not to be like, a Debbie Downer or something, but isn't so much that the hack occurred, but it's that now there are flows of funds that it's hard to stop, right? Because we have limits on the US's ability to sanction things. We also, even as we think about the hops back, that people need to check, there are technologies that can cause a ton of hops, right, within a very short amount of time. So I think this is something that we just as an industry need to focus on, not necessarily just at the layer of the attack, but what that means later on.
Josh, I'm
dark.
No. Look, Josh, I'm with you, and I agree with you. But the interesting conversations we've been having with members at the WSBA, it really is related to, and we're doing a webinar on this, so full disclosure, this is a slightly self-serving commentary about it. It really calls into question, and many colleagues in the industry said, this was supposed to be multi-sig, and the kind of social engineering around what the Lazarus Group was able to do with an exchange that is, relatively speaking, a not insignificant exchange, is concerning. And, if we're going to have a conversation about cybersecurity and call it cybersecurity good hygiene, the centralized exchanges need to be part of that conversation. David, Josh, one last thing I want to add there, and shout out to Steve Ehrlich, now over at Unchained. We all know Steve. He's been in the industry for a long, long time. He had a really good piece worth reading, talking about proof of reserves and really kind of analyzing Bybit and the challenge of, well, you recovered or at least filled the gap by borrowing from whom and who's calculating those reserves. And again, I'm not trying to be Debbie Downer either, Josh, but there really is this comprehensive conversation around, what is the cybersecurity landscape in this space, and what do people, particularly TradFi, need to be aware of?
Yeah.
So,
I mean, one of the sorry.
Oh, I'm going to jump in, Josh.
Yeah,
One of,
please do.
one of the things that I think is that I think cybersecurity is really one of the existential risks for our industry. But I'll take two sides of the coin. On one side of the coin, you look at people are holding most of the assets in cold storage and moving them to hot storage. So you didn't see a total collapse of the treasury for Bybit from the breach, but not from the breach, but from the penetration, we'll call it. But the one thing that I did see that as positive is that other folks in the industry quickly came to their aid, lending Ethereum to them or lending USDT to Bybit to enable them to keep their business ongoing, and probably to prevent a little bit of a further contagion. And there is that sort of spirit amongst the industry and players in the industry to support each other during these times. So it's kind of like a three-dimensional thing here, because on one hand, it is the most existential risk. On the second hand, it really shows the cohesiveness of the industry and willing to work together in exigent circumstances to enable an exchange to keep running. The downside to me is that it's another reason why people want to buy ETFs and the safety and the wrapper of an ETF rather than holding spot on exchanges. So you have this sort of three-dimensional puzzle here. But I think the good news is that there's an outcome that's favorable and that no customers were hurt.
David, I'm sorry, go ahead.
The only thing you have is the risk, like Josh mentioned, of using whether it's Tornado Cash or Rune or one of these other, or through meme coins, a way to sort of move those Ethereum and transmorph them into Bitcoin or other things and make them untraceable. So that is the one part also that's hanging out there as an issue we have to address.
Yeah.
David, if I could, Josh, just real quickly, I agree with you, but I do disagree on the downside. I think there's a different downside, and the different downside is, and I had this conversation with a friend and a colleague, when you look at how the market reacted to exigent problems and kind of helped fill the gap, his response was, well, FTX tried to do that too. And you can worry about the idea of contagion in situations like that. And again, I know there are very different circumstances, David, and to Emily Landon, thank you for joining, pointing out, David, you made an excellent point. But perceptually, parts of the marketplace will ask, well, same problem happened with FTX. Maybe that contagion spreads. And to me, I think that's the biggest downside of the conversation.
Yeah.
Go ahead, Josh.
Did you want to reply to that, David?
Go jump in.
He wisely will not reply. No.
No. I'm feeling a bet. No. But yeah, I mean, some people have said, well, for the cyber pieces, the cyber vulnerabilities, insurance, right? And that how much can be solved with proper insurance. I think that doesn't solve it all the way for the reasons that you guys have noted, which is that solves it perhaps on the front end, right? And maybe that solves it as to customer losses to the extent, or business losses to the extent that there is somehow the ability to obtain sufficient insurance, which of course is another question. But I think that the free flow of funds is a challenge. Now, this isn't unique to digital assets, so just for anyone listening, not saying that's unique here. It's troubling that it's the same hostile state that keeps doing this again and again. And once they have the funds, it's tough to stop them.
But that being said, Josh, the insurance industry isn't particularly deeply embracing
Agreed.
the world of crypto. There are legitimately large organizations, some of them publicly traded, that are having insurance challenges. But I'm with you. That would be an ideal solution.
One other thing I'd say, Ron, is I think we need to have better standards for how we handle assets on trading platforms. And I don't want to start like another industry standard group and this and that. We need to have better hygiene on these things. And I know there is sharing that goes on between the exchanges when there's different threat vectors and My company FTI deals with these threat vectors, and is in constant communication with a lot of the big crypto firms. But there just needs to be better hygiene around when you're moving this amount of crypto, on a regular basis, to avoid some of these things from happening. And I know it's easy to say after the fact, well, you could have done this and that, but I think there needs to be more testing of these scenarios so that you don't run into those issues.
Who would do that, David? Like, what's your vision of what that looks like in operation, I guess is my question.
Well, I mean, I think in operation, you sit down and you whiteboard it. Again, I'm not going to plug my company because we help companies do that. But in general, you could sit and whiteboard it and have procedures for how much you're going to transfer at one time. Making sure that what you're signing, the transactions you're signing, are what you think they're signing. If you're not sure, doing test transactions to see if you're not sure, and just real hygiene around it. That I think most of the mature exchanges are doing. And Baiba may have been doing it themselves, but there really needs to be preparation on the front side and then preparation on the back side. Like if you do have an issue, who's going to help resolve it? Who's like on the red phone, so to speak, ready to get into action, and so that there's a team dedicated to that if one were to occur.
Got it. Understood. Josh, David, could we pivot back to one thing?
Sure.
And Josh, I wanted to ask you specifically because it looks like the SEC is dropping cases like hotcakes. And yet, all week long, the markets have not taken it the way I anticipated that they would. Am I wrong? Should I have not been that optimistic about the SEC dropping these cases and the market reacting positively?
I mean, it's kind of mysterious. I guess one of the things, you guys would know this better than I would, but I guess there's always the possibility that maybe some of these changes were priced in already with the change in administration. But I do think, as you said, there often is a lag between when crypto native and other folks react to this. I do think, we're seeing more and more and more announcements, including yesterday, the staff statement about meme coins.
Yes.
So I think that while we may not be seeing as much of a bounce or any bounce as a result of some of the dismissals of cases, I do think that on the business side, just in my practice, I'm seeing a huge amount of activity that is coming. And I think that will ultimately drive activity and ultimately drive prices. Although I don't speak about prices.
Well, and I think we see that as well in the background beyond the noise of the markets and me texting Josh and David about, price declines every week is, the news on Citadel jumping in and preparing. After a long time, Citadel was not really going to be part, David, of the ecosystem. They're planning real operations. And you and I, the three of us, know that Citadel getting involved in a market means they see a future in that market. David, will there be others?
There will be, but I want to go back to the SEC point for a minute. Look, we had like a seismic shift. I think in 1 week, we undid 1 or 2 years worth of enforcement actions brought by the former chairperson. And so I think this is a really meaningful event. I wrote a list down. You had Coinbase, Consensus, closing the OpenSea investigation, Uniswap, Robinhood. There's a pause in the case against Tron. These are all major Wells notices or cases that have been brought. So I think this is like an important sea change. And I actually just saw something from Hester Pierce that she wrote this morning on X. Her saying enforcement is an important tool for the SEC, but it's not the right tool for crafting policy. And I think that sentence sort of encapsulates the new view of the commission vis-a-vis the old one. So what I would say, Ron, it's like extremely bullish right now.
Yeah.
The thing is, we know the past is being resolved, but we need regulations to codify what the present and the future is going to look like for us to really be able to move forward and really benefit as an industry from these changes.
Yeah. And David, Josh, just to, for clarity's sake and for everyone in the audience, thank you for joining. If you've got comments or questions for David or Josh or I, please put them in the chat, LinkedIn Live and on X. But David, to that point, again, and the SEC has been clear and the industry's talked about this, that precludes any conversation about look, there are fraud cases out there. The regulator should continue to pursue them to the extent they can. And that's an important kind of cleansing operation in my mind for the broad crypto industry. So everything's bullish, and there's this long-term bullish, David and Josh. And I'm coming back to why the heck are people selling? So David, it brings me to the conversation that three of us often have. Is it risk off? Macro tariffs are bad, and we wish the president would stop talking about them. Is that the driver for this?
I mean, I think so. Every time it seems that the mention of tariffs come out, whether it's in a press conference with a foreign leader, or just during Q&A with the press at the White House, crypto sells off. And I think risk assets will continue to sell off when we don't really have a sense of what the impact are of the tariffs.
Yeah.
Look, I mean, I'm of the view that I am for reciprocal tariffs. I think that we should have an even playing field. And I don't think, personally, that we are going to see large increases in prices based on these tariffs. However, I don't have a PhD in economics, and a lot of people in PhDs with economics think differently about what the impact would be. We all know that the street likes to have certainty. So I think as we have these tariffs announced and it's uncertainty around what's going to happen, the market reacts to it and pulls away from some of the riskier assets, and we see a sell-off.
Josh, is David wrong?
I think David's right. I also agree with what he said about the seismic shift with the SEC's approach. And I didn't mean to make it sound minimized or something when I was mentioning it. Saying perhaps that some of those actions were priced in, because I think that doesn't do justice to what the step change that we've seen. But yeah, I mean, from what I've been reading, it does sound like people are concerned about the effects of tariffs.
No.
But I think some of it's just a little bit of a surprise in general. I mean, just that, like with the price, I think some of it, no matter what we come up with as the reason, who knows what the reason is? I mean, I think a lot of people in government, not that they necessarily, for a variety of reasons, would be crypto holders. But we're seeing a lot happening with the federal government and a lot of pain as a result of some of the emails and other activities that we've heard about.
Yeah.
I don't know to what extent any of these changes is having an effect on the market, but yeah, I think some of it, while we can come up with ideas, it could be something. Although I defer to you guys, but you guys have often said this in the case of Ether, where why isn't it going up alongside certain other tokens, including are there other factors at play? And those factors could be quite personal factors.
Fair point. And speaking of Ether, David, you and I talked about this, down almost 33% on the year. So that's a rough way to start the year. Josh, that cues up kind of an interesting thematic analysis I want to raise for you and David. David, we talked about it earlier, that TradFi reacts more slowly to crypto news, just given the dynamics and size and breadth of the markets there. It makes me ask the question, David, when we look at macro data, and I'm going to bring in the macro conversation. We had some data this morning. Inflation was down slightly with expectations. Consumer spending was down markedly. I think it's the lowest in 4 years. I need to remember the numbers there, which really puts back on the table, David and Josh, this conversation about a potential interest rate cut later on in the year. Is crypto more responsive to macro data, David, than TradFi?
Wow, that's a loaded question.
Easy question.
Wow, that's a hardball right in the middle of the afternoon on a Friday. Look, I think that crypto to the downside is more reactive to news, to macro news. And I think it has like a positive correlation when there's rate cuts and things like that, but I think it's more reactive to the downside when there's negative news out. That's what I would say. But I think that it's something we've talked about a bunch of times on this podcast. There's still this group of it's really like two consumers in the U.S. The lower and middle class continue to struggle with inflation, food prices, housing, and then the upper class is really the one who are spending and who are driving the consumer spending that goes on in the US. And at some point, the lower and middle class is going to have to be addressed. Like it just
Yeah.
can't go to the place where we're like going to have year-long highs in credit card delinquencies and delinquencies on mortgages. At some point, that's just not sustainable. So I think that's the thing a lot of people need to be aware of.
David, that drives home a really interesting point. And I think, the Journal reported, I think it was today, to your point, the top 10% of income earners in the United States account for half of consumer spending.
Yeah.
So when you look at middle and lower income folks who are dealing with cutting spending and the concerns, David, that you notably raise, crypto is not going to be part of their buying plan. It really takes a good swath of the population that might have been involved previously off the table. And that might, in my mind, account, Josh or David, tell me if you disagree, that might account for some of this kind of downward pressure. There's just no buyers there right now because of some of the circumstances.
In the crypto space, Ron, I would push back on it a little bit because I think you're starting to see more institutional buyers and 13F files. So I think you're seeing, what I would say is you're seeing more buying on the institutional level. You're not seeing a broadening out of buying on the retail level. That's what I would say.
Fair. I mean, that gets balanced with, outflows on the ETFs at an institutional level. Something, we have to keep in mind as well.
Yep. What do you guys think about sorry, David.
No, go ahead.
Go for it.
What do you guys think the effects will be if there is, in fact, a Doge dividend? Not on the but the.
I know what I'll spend my check on. David's dinner.
I don't know if that'll be enough, Ron, but.
Oh, come on.
It's really interesting. I'm not personally in favor of these type of refunds, but I think the idea is that almost all of that money will go back and be spent in the marketplace, and that will help stimulate business and GDP and things like that. But if we have such a big debt, and I'm a fan of Doge, and I think they'll do a good job. I think I'd rather see them pay down the debt than give everybody a rebate.
Yeah, I think that's a good point. And Josh, David, I agree with you. To the extent that they do issue this kind of Doge dividend to people, one would hope people either use that to pay down their debt, because if you're looking at savings are now come down significantly from the pandemic highs. I don't know that they'll splurge shopping immediately. So, yeah, but paying down the debt, I think, is overall a good thing, because that affects financing for the government over time. David, Josh, we've talked about that as well. But it'll be interesting to see if they even if there are checks coming.
Well, guys, maybe it would be interesting for people in the audience to hear, who might not know. In your view, what does paying down the debt at the national level, how would that affect potentially the crypto markets?
David, you want to start, or you want me to?
Listen, I want you to jump right in, Ron.
I will jump right in. So the overhang for the government, when you look at the long-term debt, so there's the deficit, which is the annual difference between government outlays and inflows of revenue, is approaching, I think it's $2 trillion a year. Someone correct me if I'm wrong. That gets added to the overall long-term debt of the United States. The debt needs to be serviced. The government pays interests through treasury notes, bills, bonds, etc. And the more interest it has to pay, the more it crowds out government allocations for other things. There's a long theory that once a government has to pay more in interest than entitlements or defense spending, that kind of marks a downward trajectory for many nations historically. So basically, Josh, lots of debt for the government crowds out where the government could be using that money to do other things. Those interest payments now also are not 0% interest. They're in the 4 or 5. David, what's the 20-30 year now, at 6 or approaching?
Yeah.
6? Yeah. So when you're talking a multi-$30 trillion debt that the United States government needs to service every year, you're talking hundreds of billions of dollars just going to interest. So that's kind of why paying down the debt is one way to help alleviate that. The other argument that the administration is putting forward, David and Josh, is, well, the Fed should cut interest rates. I think the Fed should not be part of politics, but yes, lower interest rates help the government refinance at lower rates, but you can't force lower rates. Inflation, in my mind, is always an monetary policy, David, and the Fed should be responding to it that way. That's a long answer, Josh. I'm sorry.
Don't be sorry. It was great.
No,
and what do you think, David?
Yeah, I think it's really helpful. All I would add is the ability to sell a lot of debt at lower rates means it's just lower interest we're servicing, and less, the cost of money is less. And so that's why the government wants to see these lower, interest rates. But like Ron said, if you have inflation, you have maybe rising unemployment, but I don't know if that would, rising unemployment might support lower interest rates, but rising inflation is not going to support lower interest rates right now. And it seems like for whatever reason, regardless of tariffs, because we're not feeling any of that, inflation, I think last year was probably going up higher than was reported, and we're still seeing that in the first quarter of this year.
Yeah. And you still see it in some of the prices out there for, let's bring back that macro conversation on the different economic, lower and middle income. Food's still relatively expensive. Fuel's still relatively expensive. The delinquencies in payments shows that people can't afford some of the things they were able to afford before inflation hit.
Yeah, and also now some people are going to have to start paying their student loans again if they have them, because COVID paused them. But I think that's come to an end.
So is that over now, David? Like, do people have to start paying their student loans again? Apologies, I stupidly paid off my student loan a long time ago.
I mean that's what I've been reading, is that that pause has stopped, and now it's been going on for a little while now, but people have to start paying that, and some people have significant loans. So I don't know when it stopped or when it restarted, but I know it's recent, and obviously that can be meaningful money that's not going back into the consumer market, but that's just going back to government lenders or private lenders.
Shout out to our friend Greg Murphy. Ron's been reading Ray Dalio. Nice. Thank you, Greg. Indeed, Ray Dalio is worth reading amongst others. Bit long. There's a lot of texts to a lot of the things Ray Dalio puts out there, but it's worth the read. Thanks for joining, Greg.
Yeah, so Ray Dalio is somebody really interesting to read. But what about you, Josh? What do you see in bucolic, New Jersey, where you are?
What's the Clayman family office focus on, Josh?
Has the Clayman family office been making any moves in the market?
The Clayman family office has not. The Clayman family office has been catching up to the extent it can on sleep. But yeah, no, I think I leave these sorts of market movement analyses to you. But I will say, just in terms of what I'm working on, as I've kind of alluded to, I mean, not just with crypto natives, right, which obviously are very closely watching the moves by the regulators in the US, including, for example, as I noted earlier, the statement yesterday about meme coins, right, not generally not being securities. And again, tying it back to the Howey test, which it all gets tied back to. But yeah, I mean, I would just say large institutions, banks, others, they're really making moves, and a lot of really premier enities that have stayed outside of the US in the digital asset space, they're meaningfully making a move, scoping things out, taking steps that we haven't seen. So it's busy.
Josh, can I ask you one thing? You mentioned the meme coin thing, and the three of us have spoken about Commissioner Peirce's and the SEC's commentary that meme coins are not securities. I want to be clear, because I'm concerned that some folks in the industry are misperceiving that. That is not an endorsement of meme coins, and nor is that any sort of advocacy for meme coin issuance. I think that's the big thing I'm concerned about in the industry. David, let's you and I say it. Meme coins, for those who aren't careful, are dangerous. I'm not endorsing or denying the use of meme coins, but are you as concerned about that perception as I am, or am I overstating it?
I don't think they're dangerous, Ron. I just think that people are getting into meme coins the same way you buy lottery tickets.
Yeah.
And look, you're either going to be someone's exit liquidity, or you're looking for somebody to be your exit liquidity.
Right.
And so, look, I don't have an issue with meme coins. I think that if people want to buy them, they should be able to buy them. I think, it would be good to have proper disclaimers around them, around how much the team is going to hold, and how much is in the market and things like that. I do have a problem when they become frauds, and when if the
Right.
team says they're going to hold $5 million and they don't, and they just dump them on people. That's where I have a problem. So
Yeah. And David, to be clear, when I say dangerous, I only mean it from the perspective of those who do not approach things like meme coins with their eyes wide open.
No, I agree, Ron. Like, people should not be putting significant amounts of their investing portfolio in lottery tickets.
Yep.
Or they should at least know that they're doing this, and then just if that's what they want to do, they should be free to do it. But they do it at their own risk, or as we say, caveat emptor.
Indeed. Josh, go ahead. I cut you off.
I think a few things. I mean, one is if you look at the staff statement from yesterday, it talks about, that there is no pooling of funds, that they're not promising to build out an enterprise, things like that, going along with the Howey test. But it does say, notably, towards the end, it says, notwithstanding the foregoing, the statement does not extend to the offer and sale of meme coins that are inconsistent with the description set above, or products that are labeled meme coins in an effort to evade the application of the federal securities laws by disguising a product that otherwise would constitute a security. So remember, the Howey test is still being applied here. And I think what it also, they talk about the economic realities again. I think also it's important to remember state and other federal regulators. This does not have an effect on how they may enforce.
Right.
And so to the extent that there is fraud or something like that, certainly there are other regulators, and, state regulators may take a different position. Similarly, this would not stop plaintiffs' lawyers from bringing lawsuits, alleging violations, even if the SEC goes in one direction. And I would just, my takeaway generally from this, subject to continuing inputs, is that the SEC and the task force are trying, in my view, to draw some bright lines. Thus far, there haven't been bright lines. And of course, it's a facts and circumstances test. So how many bright lines can you have? But by putting these categories out there like this, I think it's not to endorse them, but I would suppose that part of the reason to highlight it this way is to say, look, you can invest in this, people, but don't come to us thinking that you have the protections of the securities laws.
Right.
So I think that's, to my mind, that could be what is being kind of motivating this, as opposed to saying, "Yay, go invest in meme coins."
Yeah, and Josh, to that point, maybe endorsing was the wrong word, and I shouldn't have used that. But you can envision people saying the SEC is cool with meme tokens, and it's a much more thoughtful analysis that the task force has put forward. So I'm with you. I'm with you, Josh.
One other thing we have to remember is this is guidance and it's not law. So it's certainly a guide point for what the SEC would do, for somebody who's, creating a meme coin. But, other states and other jurisdictions, still have latitude to pursue things as they may see fit. But again, I think the one thing we have to be aware of too is, like Josh said, if people are trying to, mint meme coins, but really minting more of a security like asset, and doing it in sort of, hey, it's calling it a meme coin, and just being mindful of that.
Josh, just for the record, we missed you at the happy hour in New York City on Wednesday evening when David and the crew were talking about minting a RON token. I knew that happy hour was over, just to be clear for everyone in the group. David, Josh, we're approaching time. David, I know you're in New York City and you've got a contingent of private clubs that you'll be going to with the entourage, but sadly I can't join you, my friend, but curious about what you're going to be focusing on over the weekend besides the parties.
Besides the fun stuff and quality father-daughter time, I am going to be thinking about, what does a sandbox look like? I think that is the next, as we continue this process and we look for stablecoin legislation and we look at what market structure looks like, one of the things is that we have these tokens out there that, we believe as a community that they're assets, that they're not securities. But what would a regime look like where there's some sort of sandbox to allow existing tokens to work through the classification process if there is an issue with that? and what rules might, guide this sandbox. So that's something I've been thinking about. And, I know a number of us have talked about it. So that's something I've been thinking about. And, also like just thinking legislatively about things we're going to talk about when we all go down to DC together.
Yeah. Josh, let me ask this question. How close to that, like what airport do you domicile the Gulfstream in before you travel?
I mean, I use the helipad out back.
Oh, okay, yeah. That's what I assumed. You led me there.
You're Brill, of course, Ron.
I mean, I think for my weekend, other than, doing some work and hanging out with my kids, I think one of the things I've just been thinking about more generally is, now that we have an SEC that's been backing off from enforcement and also, in my view, trying to draw some distinctions and some demarcation of where their jurisdiction may end, just how that works in the event that Congress then passes laws that redraws the boundaries. And so I'm just thinking about that because, that is something we've asked for of Congress,
Yep.
right? That's something where we have asked for market structure and other sorts of clarity.
Yeah.
Yet, if we're finally getting some clarity from the regulators, what if we end up with something that puts things back in a category that they've just been freed from? So I think making sure that we have good ongoing communications with lawmakers and others, I think is going to continue to be super important.
I will, like you, Josh and David, doing a bit of work. I've got a nice Chianti waiting for me over the weekend as I read through the Genius and Stable Acts. Josh, to that point, you and David and I and a handful of other members are going to be in Washington on March 27th. We're not lobbyists for anyone in the audience, but we obviously want to share voice of industry. So that will be some of my time filling out the schedule. One other thing, just going back to Bybit, for everyone in the audience, WSBA is going to be hosting a public webinar deep diving on some of the issues, David, that you and Josh have raised. We'll have a technical analysis. We'll have a cybersecurity analysis. Hoping to do that sometime in mid-March before the news goes away. That kind of cybersecurity hygiene is really important for the industry. And it looks like winter's just about over. We're getting into some relatively mild weather here in New Jersey, Josh. But otherwise, David, Josh, let's leave it there. For everyone in the audience, thank you so much for joining. This recording will live on YouTube and will live on Spotify. Thank you as a podcast going forward. Josh, David, always a pleasure. I'll see you guys next week. We'll leave it there. Have a great weekend, everybody. Bye-bye.
Bye, everybody.
Thanks. Bye, guys.